Good morning. It is January 17th. We had an interesting week. USDA report, of course, hammered the corn market. We lost 21 cents this week. Actually, I think we lost about 28 cents on the day of the report on Monday and gained some back the rest of the week. Soybeans, after a rough report, actually were only down 5 cents for the week. Chicago wheat March was actually up a penny. Minneapolis and Kansas City down 3 cents this week. So the grains, after a horrible report Monday, recovered for all these crops except corn, where the report was most negative. Live cattle down $1.57 this week. Feeder cattle went the opposite direction, but Friday had a downside reversal. Dollar gaining slightly this week. Gold up a big $95 again. And look at silver. Actually, we were down $4 on Friday. Still for the week, we finished up $9.19, $9.20, about 12% gains for the week. Crude oil up 40 cents. So it's a very interesting situation when you look at the grains. Other than the USDA report where corn, started the day 4 cents higher, reversed downward, and there was no follow through on that downside reversal. Corn almost at the cheapest price of the year, basically within a dime of the lows way back in August when we thought we had a very, very big crop. USDA seemed to think that we still do, though. I'll run through those numbers in a minute. The USDA report on Monday socked the soybean market with 20-cent losses, but we gained a lot of that back, finishing 5 cents lower for the week. Look at this. Interesting. Soybeans hold that tentative little uptrend. We actually have a little double bottom here in the short term. Well, USDA did kill the market in a sense this week. That is the end of the 25 numbers expected. And so actually, we are going to start very quickly in about 2 or 3 months, start focusing on 26 expectations. But look what USDA did, actually, almost negligence in my mind. And most people would be fired for this kind of incompetence. So they hiked the yield in corn half a bushel. Not a big change, really, but most traders expected a 2 bushel decline. And a 1.3 million acre adjustment higher in harvested acres. They have raised the harvested corn acres 4.5 million acres since July. Ending stocks go up about 10% to 2.227 billion bushels, up about 198 million bushels, or about 10%. So, but the biggest part of that, of course, was this acreage hike. Pretty significant acreage hike, probably cost us 200 million, 210 million bushels alone. And that was a bigger impact on the corn, I think. And of course, a big reaction to the negative side. I think we lost 22 cents that day. And actually, we started the day 4 cents higher. In soybeans, they left the yield unchanged, but many expected a reduction. Zero point 0.3 bushels is the most reliable number. Some people estimating a half a bushel reduction. Actually, I think in reality, soybean yields were probably down a lot more. Our yield model finished the year at 52.3, and corn it finished at 189, higher than the 186.5 that USDA ended. So actually, our soybean yield was considerably lower than USDA's. And was that at a punt? They left the yield unchanged. Uh, how likely was that? It almost seems like they didn't even hardly look at soybeans. 100,000 acre increase in harvested acres. They cut the export 60 million. That was where all the increase carry out, 20% increase in carry out to 350 million bushel. Did the market believe it? I don't know. Do I believe it? Of course, USDA threw those numbers out. That's what we're going to end up trading until some stocks numbers revises the carry out. That was what we're going to be stuck with. So the USDA's report probably threw a damper on the bull market for another 2 or 3 months till we focus on 26. They cut the feed wheat use, 10 million bushels, increased carry out 25. Wheat kind of shrugged it off. It's kind of bottomed the wheat market anyway. They raised that corn acres 4.5 million acres since July. I've never seen that in 30 years of watching the market, that much of a revision. They're supposed to have a March acreage intentions report and on March 31st, and the final June acreage planted, is supposed to be the final number. They can revise it from FSA planting numbers, but obviously that's very, very late in the year after July to revise the corn acres, basically 5 or 6% higher. That's basically an admittance of incompetence. Why do we have it? Why do we have USDA reports? I'm sure prices would be much higher without them. So here we have the wheat market, Chicago wheat. Basically, there's your negative USDA report, no follow through. Weakness, of course, you were sitting here at a bottom. All of these prices are so cheap to begin with. No one is making money at these price levels. Spring wheat lost 3 cents for the week. You basically are back down to the low of the year. But I think this is interesting. Kansas City wheat is not at lows. We had a Kansas grower at our Scottsdale meeting this week, and he basically said no one knows what 60-degree weather all winter long will have as an effect on wheat. It's growing like crazy, and it has not gone through dormancy, which it needs to do in order to head. So maybe Kansas City wheat is finding some strength relative to the other wheats because of that situation. It's a very, very extremely warm winter. So the live cattle market, you had your downside reversal on Friday. Otherwise, cattle were up for the week, but we ended up with that big down day on Friday. Live cattle were lower. Feeder cattle ended up higher for the week, even though we had that downside reversal, lost about $8 on Friday. So, but we are near the highs. My father-in-law passed away this past week, and he lived to be 92 years old. He probably lived another extra few weeks or months because cattlemen in 92 years, he hoped one day cattlemen would finally make money. And actually, in the past year and a half, they have. Cattle prices have gone 55% higher than they ever were. So in 92 years, you finally see some profitability in the cattle industry. The interesting thing is, people have observed cattle have gone out of many areas. People do not want to raise cattle, and thereby we have the numbers problem. Maybe cattlemen will make money for a while. The gold market, really the stars of the markets right now are gold and silver. Gold was the previous high a year and a half ago was 2,100. Gold is at 4,600 basically right now. That's the equivalent of about $40 soybeans or $18, $19 corn. Going to the previous high in soybeans, it would be, $18, corn $8.50, and then doubling it and adding to that, maybe going up, almost 2.3 times the previous all-time high. Those are very high numbers for gold, but look at the silver market. Silver rallying over 10% this week, and silver is now at $89. The previous all-time high was 50, which nobody thought was ever achievable again back in 2011, and silver is rocking and rolling. Here's the point of this. We talk about these outside markets, gold and silver. There's a reason gold and silver are rising, and maybe these commodities are all very undervalued. A couple of commodities that are still undervalued, the grains are, of course, livestock, cattle aren't, but grains are. Crude oil is down here at the low of the year, around $56. It's rallied lately and set back a bit. Actually, we're going to probably have to buy some energy needs here around this 58.50 mark or so, because, and basically early this next week, because I think that all of these commodities are in the next year or two are going to see upside potential. Gold and silver and the cattle markets are almost indicating that. The dollar has rallied the past few weeks, gaining about 1%. But if we break down below this previous low, 96, I think we could run down to 90 very quickly. Certainly, if the Supreme Court says tariffs has helped our budget quite a bit, and if the Supreme Court, which is a bunch of liberal attorneys who have no idea about economics, would certainly be dumb enough to reverse those tariffs, and that would cause a decline in the dollar, probably a very precipitous decline. So we have had some significant moves in markets in the past 2 years, most significantly in gold, silver, and cattle markets. And those are indicating something different is happening in the commodity world. Grains have done nothing. Grains are at their basically a 5-year low right now. We've sat down here at very low levels a long time. USDA gives us another bearish report in January, and the markets react that day and cannot go lower because they're already extremely cheap. I think throws a damper on the ability of grains to rally significantly in the near term. Probably take us 3 more months languishing down here at these low levels. This is not the place to be selling anything. And I think that what's that old saying? Low prices cure low prices. We've had low prices a long time. USDA can throw all the cold water on it they want. You can't make money raising grains at these marks. So I think that we're going to see a pretty decent rise in price this next year. And I think it's going to get much, much better. Whether we can do what gold and silver have done recently, I don't know. But you'll have to look at indications from those outside markets and the dollar to see where these grains potentially can go. But obviously, this is a time to stop looking at the grain markets and lock up your bins and let's see what can happen this spring and summer, because I think there could be a lot of fireworks in commodity markets in the coming year. If you don't believe me, just look at what gold, silver, and cattle have done. You have a great weekend and good marketing.